Note to learner: this video provides content that will be hosted on the Ginnie Mae LMS in the near future. In this video, you will not be able to interact with screen content to include selecting pop-ups, launching resource hyperlinks, and answering knowledge check questions. Nonetheless, you will be presented with all of the content presented in the interactive e-learning training. Though the audio narration may request that you select items or buttons on the screen, please pause the video to read the content and then select play to continue with the video. When the video advances to a knowledge check, please pause the video and try to answer the question in your head. Select play to see the correct answer or answers to the question.
Welcome to the Cash and Reconciliations. The purpose of this training is to examine Ginnie Mae cash management and reconciliations requirements. Select objectives to learn what you will be able to do by the end of this module. Select Next to continue when you are ready. Reconciliation of cash in P&I and T&I accounts consists of bank account statements, internal service records, and reports to Ginnie Mae for your monthly activity. Totals are found by navigating to RFS, Exception Feedback, Summary tab. Select Next to continue. As noted in the MBS Guide Chapter 16, all issuers must segregate the cash flow from pooled mortgages by identifying principal and interest, taxes, insurance premiums, and other escrows, late charges, assumption fees, and any other fees or miscellaneous collections. All sums representing principal and interest, recoveries of principal, or any other funds due to the security holder, as well as any tax, insurance premium, or other funds collected for the benefit of the mortgage are custodial funds. Chapter 16 provides important information on central P&I custodial accounts, permissible withdrawals, automated clearinghouse, ACH, test audit, account change requirements, and escrow custodial accounts, among other topics. Part 9, Clearing or Disbursement Accounts, provides guidance on collection clearing accounts and P&I disbursement accounts. Part 11, Reconciliations of Custodial Accounts, and Part 12, Transfer of Custodial Accounts, provide valuable information that you should understand for your monthly reporting. Importantly, quality monthly reporting is dependent on your Ginnie Mae program knowledge, reconciliations, tests, and internal service controls. Select Next to continue. Cash management includes the following: Ginnie Mae's access to draft funds from your account, following Chapter 16 custodial account requirements, funding P&I shortfalls, completing monthly test of expected P&I, reconciling mortgage collateral to securities outstanding, also known as pool to security, completing monthly bank account reconciliations. Miscellaneous items would include, but are not limited to, payment clearing and disbursement clearing and internal reconciliations. Select Next to continue. It is very important that all Ginnie Mae issuers ensure they do not have any restrictions in place that would impact Ginnie Mae's in the following ways: Ginnie Mae's ability to draft funds from their central P&I custodial or disbursement accounts on the date of the draft each month. You must ensure that the financial institution has not placed any ACH debit blocks. Issuers should have a procedure in place for communicating with Ginnie Mae and its Central Payment and Transfer Agent, CPTA, if any issues arise or are identified. This includes available funds for the guarantee fee draft. 1 business day prior to the draft, as a best practice, confirm that the account is fully funded and there are not any holds or system limitations. On the day of the scheduled collection, confirm funds have been swept from the designated account. If the draft has not occurred, take the following actions. First, contact your custodial bank directly for inquiries. Second, provide your Ginnie Mae account executive the plan to remedy the draft failure. Select Next to continue. As stated in Chapter 16, collection clearing accounts are permitted provided that all Ginnie Mae funds deposited in the clearing accounts are credited to the applicable custodial account by the first business day after they are received by the issuer, or by a lockbox agent or subservicer on the issuer's behalf. Further, the funds must be deposited into the applicable custodial account no later than the second business day following receipt. Let's examine this in further detail. The collection clearing account is an optional account that can be used for Ginnie Mae and non-Ginnie Mae funds. This account needs to transfer to the P&I and T&I accounts, Ginnie Mae funds, within one business day. You may recover corporate advances provided excess funds are restored to the custodial account from this collection clearing account. The collection clearing account should be a zero balance account. This means you should be able to show detail of every cent that is outstanding in this bank account each day. For liquidations, the clock starts with the post date of deposit on the bank statement. Since issuers do not post payments received after hours until the next business day, they have one business day from the date of the post or deposit. Ultimately, the funds need to be deposited into the Ginnie Mae P&I account within 2 business days of receiving the funds. Select Next to continue. Turn your attention to the requirements for the P&I custodial bank account. It must be only Ginnie Mae funds, be a single non-interest-bearing custodial account, have a Form HUD 11709 form for each account, be maintained at a financial institution capable of ACH. Bank reconciliations must be completed within 30 days of the issuer's cutoff date. Meet the bank rating requirements for custodial account verification, CAVs. Note, the P&I custodial bank account may contain funds for more than one pool. Select Next to continue. All proceeds or recoveries relating to Ginnie Mae pool loans must be deposited into the appropriate custodial account. These include proceeds received for loan payoffs, claim payments, sale proceeds, repurchases, additional principal payments, installment collections, insurance proceeds, etc. P&I disbursement accounts are permitted provided that the account is used exclusively for funds relating to Ginnie Mae securities. Before a disbursement account is used, a master agreement for servicer's P&I custodial account, Form HUD 11709, must be executed and submitted to the PPA. While issuers may use separate disbursement accounts, there are essential requirements for P&I disbursement accounts. They must be only Ginnie Mae funds, be a non-interest-bearing account, be a zero balance account, be maintained at a financial institution capable of ACH, have only one Ginnie Mae issuer ID number per account, and have a Form HUD 11709 for each account. Select Next to continue. The requirements for T&I custodial bank accounts are slightly different as follows. Contain only Ginnie Mae funds. May be an interest-bearing account. Must have a Form HUD 11720 for each account. Bank reconciliations must be completed within 30 days of the issuer's cutoff date. Meet bank rating requirements for custodial account verification, CAVs, for multifamily accounts. must have a separate escrow custodial account for 203K FHA funds and any other funds per FHA and RD or USDA requirements. Select Next to continue. An issuer must maintain P&I custodial accounts at insured depository institutions, funds custodians, that meet the rating requirements adopted by Ginnie Mae. Aggregate P&I payments due from borrowers is greater than or equal to $100,000 in any 1 month as measured by the fixed installment control. Project loan escrow accounts, whether required by the Federal Housing Administration, FHA, the U.S. Department of Agriculture, USDA, Rural Development, RD agency, or Ginnie Mae, for any project greater than or equal to $100,000 are also subject to these requirements. CAVs are due between the 6th and 15th business day of March, June, September, and December that the fund's custodian maintaining the P&I custodial account. In the case of a multifamily pool only, the escrow custodial accounts for each pool or loan package reported meets the requirements. Select Next to continue. The institution must have a rating that meets at least one of the following criteria. Institutions with assets of $30 billion or more must have the following: a short-term issuer rating by S&P of A3 or better. If not available, then the long-term issuer rating must be BBB- or better. A short-term bank deposit rating by Moody's of P3 or better. If not available, then the long-term bank deposit rating must be BAA3 or better. Institutions with assets less than $30 billion must have the following: 125 or better by Institutional Deposits Corporation, IDC, or C+ or better by Kroll. Select Next to continue. Depository institutions must satisfy the following 3 requirements to be acceptable as a fund's custodian, even if it is rated by another organization below the minimum level specified. They must be insured by either the Federal Deposit Insurance Corporation, FDIC, or National Credit Union Share Insurance Fund, NCUSIF. They must be rated as well capitalized by its federal or state regulator. And they must have a rating that meets or exceeds at least one of the agency rating requirements specified. Select Next to continue. Now, check your understanding. Shortfalls can be temporary or permanent. There are different methods for funding P&I shortfalls. P&I temporary shortfalls can be caused by the following: late payments for mortgages, NSF checks for mortgages, and incorrect advanced calculations. Non-recoverable corporate advances permanent shortfalls are caused by the following: curtailment adjustments, loan payoff shortage, foreclosure liquidations, and T&I shortfalls. Select Next to continue. Companies use different methods to fund P&I shortfalls. The first is corporate advances. They are issuer funds. If you use corporate advances to fund your P&I shortfalls, ensure you advance the funds to the P&I account prior to the scheduled Ginnie Mae ACH draft. Also, ensure you recover the corporate advance properly. Then, document all advances to calculate corporate advances. To calculate corporate advances on Ginnie Mae 1 MBS, subtract the following from the P&I bank balance: additional principal payments not passed through until the following month, liquidations not passed through until the following month, prepaid installments, guarantee fee owed to Ginnie Mae. This results in the adjusted bank balance. Subtract the amount due to the security holders. If the resulting number is positive, you have an overage. If it is negative, you have a shortage. Select Next to continue. Excess funds are unscheduled recoveries of principal on the pooled mortgages received during the current month that are to be passed through with the following month's payments. See MBS Guide Chapter 15-5. They are early receipts of scheduled payments. They minimize use of issuer funds. Corporate advances using excess funds are unapplied funds and service fees, as well as pools sharing the same custodial account. To calculate corporate advances using excess funds, subtract the guarantee fees owed to Ginnie Mae, ACH on the 10th CD, from the P&I bank balance. The result is the adjusted bank balance. Subtract the amount due security holders. If the resulting number is positive, you have an overage. If it is negative, you have a shortage. Select Next to continue. The pool advance agreement uses bank funds. This method requires completion of Appendix 6-1 to cover shortfalls in P&I funds necessary to pay security holders. It sets forth the obligation of the bank to advance any amount necessary to cover such shortfall up to a specified maximum. If the issuer uses a disbursement account separate from the pool's P&I custodial account, Ginnie Mae must have on record a master agreement for servicers, principal, and interest custodial account, Form HUD 11709. This form covers the disbursement account for all applicable pools and loan packages. Select Next to continue. Turn your attention now to the Test of Expected P&I. It is required on every pool and performed by the issuer. It provides the minimum dollar amount in the P&I account. It represents the total of all pool cash shortages funded by the issuer. Note, you may not net pools that have cash overages with pools that have cash shortages. A best practice would be to fund your P&I account for any positive differences in one transaction and retain the pool-level documentation for audit purposes. Then, withdraw funds from your P&I account for any negative differences in one transaction and retain the pool-level documentation for audit purposes. Select Next to continue. Note that the test of expected P&I calculation is only accurate when the pool-to-security reconciliation is 0. Most servicing systems will complete a similar test of expected P&I reconciliation like the one displayed when you select Reconciliation Worksheet to examine the reconciliation of mortgage collateral to securities outstanding. Select Next when you are ready. Pool-to-security reconciliation is required on every pool and is performed by the issuer or your servicing system. Recall that a pool of loans is collateralized by securities. Let's examine what happens when a pool is over-collateralized or under-collateralized. If the pool is over-collateralized, the adjusted pool principal balance is greater than the security balance. Recover unscheduled principal from liquidations or curtailments up to the amount of the over-collateralization. If the total amount of the over-collateralized pool exceeds $100, issuers may only recover from any unscheduled recoveries of principal as they occur in the pool. If the pool is under-collateralized, the adjusted pool principal balance is less than the security balance. You will need to remit principal, most likely by a corporate advance. There is a $1 loan pool tolerance with a maximum of $50 per pool. Note, with multifamily pools, each project is different. Therefore, if you have passed through too much money and now have a pool-to-security difference, please contact your Ginnie Mae multifamily account executive for guidance. Select Next to continue. Use the scroll table to review a worksheet for the reconciliation of mortgage collateral to securities outstanding. Select Next when you are ready. Now, check your understanding. Now, check your understanding. Use the scroll table to review a sample format of the P&I account reconciliation. Most issuers build this form in Excel. Bank account reconciliations must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. Details must be available listing the P&I cash book balance for each pool and loan package that uses the custodial bank account as of the issuer's monthly cutoff. The cash flow method is the balance at the end of the previous reporting month plus the daily deposits minus disbursements. This equals the ending P&I cash book balance. This balance is reported in field 12 of the pool record and is displayed at the bottom of the pool screen. Importantly, all adjusting items on the reconciliation must be completely resolved within one of the next 2 reporting cycles. If you have outstanding unreconciled items, it may result in an audit finding. Select Next when you are ready. Use the scroll table to review a sample format of the T&I account reconciliation. Most issuers build this form in Excel. Just like the P&I reconciliation, the T&I bank account reconciliations must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. T&I funds are required to be deposited in the Ginnie Mae escrow account within 2 business days, which is 48 hours of the pool settlement date, APM 15-06. The escrow balance for individual loans is reported in field 29 of the loan record. The escrow balance for all loans within the pool is reported in field 11 of the pool record. Importantly, all adjusting items on the reconciliation must be completely resolved within one of the next 2 reporting cycles. Note, a T&I balance on loan level for multifamily loans is actually not required. Select Next when you are ready. The large red box on the pool activity screen shows where all of the bank account balances are reported on the pool level. These balances can be reported on the RFS file or entered manually online. Select the Save and Summarize Pool button at the bottom of the screen when any information on this screen is updated. It is very important to select Save and Summarize Pool if any loan level fields are updated because certain loan level information is moved to the pool screen behind the scenes. If you select the small plus sign at the bottom left-hand corner, the custodial bank information displays. This is where you would update any bank account numbers or ABA routing numbers. Be sure to select the Save and Summarize Pool button if you make any updates on this screen. Select Next to continue. Now check your understanding. The goal of this training module was to provide a fundamental understanding of the cash management and reconciliation requirements. You learned that cash management includes Ginnie Mae's access to draft funds from your account. It also includes funding P&I shortfalls and completing monthly tests of expected P&I refunds and monthly bank account reconciliations. Next, you explored what causes P&I temporary and permanent shortfalls and methods for funding the shortfalls. You examined the Test of Expected P&I that provides the minimum dollar amount in the P&I account and represents the total of all pool cash shortages funded by the issuer. You also learned about over- and under-collateralized pools. In addition, you examined P&I and T&I reconciliation and learned that they must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. You also explored a pool activity screen to learn where the bank account balances are reported. Select Objectives for a review of what you should now be able to do. This concludes the training. You may use the Exit button to leave the presentation at this time.